Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your metals market update for a wild Friday, Tariff War Friday, June 15th, 2018. We're right now about 2:50 in the afternoon, just before the stock market's going to close. And the stock market has come nicely off its lows, but it's still under pressure. Look at how the gold got hit today. Look at how silver got hit. Silver's 13 cents off the lows, but still sharply lower. The copper market down. So what's taken place is the Trump administration did announce the tariffs of $50 billion today. They tried to avoid TVs and phones, but they're going after other goods, and China retaliated. China's putting tariffs on soybeans, whiskey, orange juice, and light airplanes. I can't even begin to explain it. But China's also announced that we are in a tariff war, and that's where it goes. I've been interviewed in so many different magazine publications and newspapers today because before China even said it, I said, that's the definition of war. You do one thing, they do the other. I said it's not fighting with guns, but it's fighting with taxes, and that's what we're all doing. We're putting taxes on each other, and that's where this is all headed. So, is it a one-day event? Is it going to last? Does everybody get tired of it and sit down at a table and talk things out? You don't know. What I do know is the gold market is surprising. You would have thought in a situation like this it would get a bid. It did not. Nor did the silver market. Copper, I understood. I think we were talking that if there was a war, copper would be one of the fallout items, and as was the platinum market. The dollar basically unchanged as the euro. It's like everybody got worn out today. That's the right way to say it. When you look at the gold monthly chart, you can't get away from the fact that the market, when it's hit, the 100-month moving average, starting way back here in 2016, the market started failing against that. Yes, we still have all this sideways action, and no, we haven't broken out to the downside or the upside. What the market has done is it came back and challenged, if you look this week, 1274, which is the 18-month moving average of 82.80, and we're going to settle just slightly under that. But the pattern is still one of a higher high and a lower low. And so far, the 18-month moving average of closes has done its job of holding prices together. I'm not saying it will continue. I don't know. Momentum is down, and the bias is down in the market. When we get to the weekly area chart of closes, we have stayed under the 18-week moving average, this red line. I call that the line in the sand, by the way. And we have been under that for the longest period of time since the end of March. And what that does, in my rule of thumb, is when a market is under that average, it determines the bias. It's a filter on other parts that you might trade, other technical indicators. So the bias has been down, and you can see how the market is acted. When we come to just a weekly bar chart, you've got a pattern here that's now one of lower highs but higher lows. Well, right here, this high this week of 1307.70 took out this week's high right here, and that was the week of June 1st of 1306.80. So you came back, you attempted to break out to the upside, and the whole thing fell apart with the tariff wars. You can see where you're at. You're down $18.50 for the week, and most of it's from today, $26 down basically or so. When we look at the 100-week moving average, the market has fallen to it for support. Now, we haven't been at that since December of last year. So, bearish action, bias down. The market is now under the 18-week moving average of closes, which is 1280. So it's a bit ahead of itself into a support zone of the 100-week average, and momentum continues to point down. All in all, a terrible week for gold due to the tariff war reaction of gold today to it. That's the way to look at it. And I think most traders are going to scratch their head trying to figure out why tariff wars were bearish for the gold market. I am one of them. When you come to the gold ETF, you've got the pattern just like in the futures. This week we took out this week, 2 weeks ago's high, and then the market came down again, went to the Bollinger Band, 100-week moving average of closes, momentum still pointing down. What's the near-term key to these markets? This week's high. So if you take out this week's high, next week or the week after, I'll call this a bear trap and look for the markets to get back to the 18-week average of closes, both in the gold futures and in the GLD. Now let's go to the gold miners. They did not fall apart like the futures. They do have an outside week down, so you've got lower highs, lower lows, which is bearish. Not quite finished trading for the day. The market's sitting basically right on the 18-week average of closes, and momentum is flat, maybe trying to turn down. Take out 2201, the market's going to look fairly ugly, and that would be 23 cents from here, not even 1%. I mean, it's a very small drop, but until it's done, it's not done. This is the best looking of the charts. In the silver market, you got up to and challenged this week the upper Bollinger Band, the 100-week average of closes, and the market fell apart today, going all the way back to the 18-week average, and it held it. It got as low, in fact, as 1646, right? The last trade right now, 1660. This chart is still bullish. You have the higher lows, higher highs. You pulled back into support. Unless you get down under the low right here of 1630 and a half, this market is still very much in the bull camp. I'm even looking, by the way, at the 1607 level, thinking this market has to get back under that lower Bollinger Band to prove the bulls are really losing control. I'm just looking at this as sideways action and wondering. In the copper market, as much as it fell on the daily charts, for the week it's down roughly 16 cents from an upper Bollinger Band. All fits within a norm that maybe the market goes back to challenge the 18-week average in the 310.60 area to get its foot back under it. The bias is up, the trend is up, but momentum has been lost to the upside. In the platinum market, we have patterns of lower highs, lower lows. That is bearish. Momentum is staying down and the bias is down. This is in the bear camp at this point. In the palladium market, you've got a pattern of higher lows, higher highs. Now, on the daily chart, it's interesting. On the daily chart, the weaker is the palladium than the platinum. But on the weekly charts, this is the stronger. So a bit of divergence between the two charts. Support back at 986.40. One of the reasons that these metals are getting hit, in part, China, well, what the U.S. is doing is that we're putting tariffs on some of the auto parts that are going to come in from China. Remember, it's not just cars. We don't import Chinese cars. But parts that they make there for our automotive manufacturers, we do. And that will impact the price of cars coming in and other goods, obviously. In the dollar index for the week, you're up 1.2. It's not the tariff wars that moved it. That was the statement by the Fed raising our interest rates, and that was the statement by the European Central Bank when it said not only isn't it raising interest rates, it's not looking at doing so until not this summer, the summer afterwards, to let Europe still get its footing under it. Well, that kicked the dollar because of the interest rate differential right on up. So you put it all together and you have an interesting game that is, how do I put this? I've probably taken the breath away from a number of traders. I mean, it's a pretty volatile day. Our firm's going to write about it through the weekend. And what they basically do is they cover the markets in many different ways. I do as well, by the way, for my subscribers. And I'll be covering the currencies. I'll be covering the metal markets. I'll be covering the financials in a large way. Our firm's going to write about the grain markets, the meat markets. You're going to get an awful lot of information. This is part and parcel of what our customers get. Our customers can get anything, and I'm talking the people that trade through us, of the Linn Associates that write in these categories. And believe me, it's commodity information written for commodity traders. How do you get it? Well, you can either call us and leave a phone number over the weekend. You can always go to our website and you will see everything that we've got there. It'll be a carousel of free offers, literally the front page. Just click on something, the offering page will come up. You can click up here at any point if you're watching me on YouTube or underneath us on a number of websites. I'm Ira Epstein. You have a great weekend, and I will see you all Monday.